Alright guys, so the 5 stocks we're talking about in this video generate the most dividend income in my portfolio and together bring in a total of nearly $732, which equates to roughly 37% of my total dividend income. Now before we get into these 5 dividend powerhouses, in case you're new to the channel, my name is Ryan Williams and here we strictly talk about dividend stocks and how you can invest in them to create passive income and reach financial freedom. So if you love dividend stocks and if you're on a mission to retire early, then hit that subscribe button. I'd love to stay in touch as we both continue to grow our portfolios and collect that cash flow. Also, leave me a comment below and let me know what are the highest paying dividend stocks in your portfolio. I'd be curious to hear if we have any of the same ones. All right, now getting into my 5th highest paying dividend stock, this one is Verizon. If we take a look at my dividend portfolio tracking spreadsheet, which you can start using for free, there is a link to it in the description of this video. But here we can see I have just under 44 shares of Verizon at an average cost of $51.40, and with the current share price quite a bit below my average cost, I'm taking a loss on Verizon right now. According to my spreadsheet, as far as share price returns go, I'm down about 23.5%, and if we include dividends in the mix, looking at it on a total return basis, I'm down exactly 17% with Verizon. Now taking a quick look at Verizon's share price performance, in the last month it's actually doing pretty good. It's up nearly 8%, which is a pretty big return in such a short amount of time. But if we zoom out, looking at it across the last year, it is down 27%, so it's still seeing quite a big drop. And zooming out across the last 5 years, it's seeing a negative share price return of about 19%, so it's really not been performing well for some time. However, we dividend investors can find the silver lining really in anything, and in this case, as Verizon's share price has come crashing down, all it's done in our eyes is push that dividend yield up, and it's up quite a bit. Here we can see that Verizon has a forward dividend yield of 6.65%, which is nearly 40% above its 5-year average yield of about 4.8%. So by buying Verizon today at its current compressed share price, you're able to get a higher cash flow return than you otherwise would be able to across the last 5 years on average. And the rest of the stats aren't looking too bad as well. Their payout ratio is right at 50%, not too bad at all. There's really not much of a growth rate to speak of, but that's okay because this yield is quite high, so we'll take that. But they do have some consistency growing this dividend. Even though the growth rate's not that high, they've been growing this bad boy for the last 18 straight years, which is good to see. And now back over here on my spreadsheet, Verizon is bringing in $114.50 for me every single year in dividends. And looking at this table here, going to Verizon, we can see that this amount of income makes up about 5.7% of my portfolio's total dividend income. Anyway, moving on to my 4th highest paying position, this one is JEPI, the JP Morgan Equity Premium Income ETF. And here we can see I have just over 22 shares of JEPI at an average cost of $60.22, and with the current share price just under $55, I'm down a little bit with this position, not too bad. Just in terms of share price, I'm down exactly 9%, but on a total return basis, if we work dividends into the mix, I'm actually up about 2.5% on my JEPI position. And looking at the income, every single year, this bad boy is bringing in $137.53, which represents 6.87% of my portfolio's total dividend income, which is quite a bit, but JEPI's really not a big position for me at all. If we go see how it's diversified by weighting, it's only 2.67% of my portfolio. So like I said, it's a relatively small position for me. And having said that, for not having a lot of money invested in this position, I'm sure able to generate quite a bit of income just because it has such a high dividend yield. And taking a look at that, in the trailing 12 months, JEPI has a yield of 11.37%, so nice and high there in the double digits. When it comes to JEPI, a lot of people are wondering how sustainable this high yield is going to be, and a lot of people are concerned that as time goes on, we're going to see lower dividend payments from JEPI as we head into a different market environment, which is possible. I mean, JEPI's only been around since 2020, which is not a long time at all, so its long-term performance is still yet to be seen, but so far the dividend growth surprisingly has been really nice. Since JEPI's inception a few years ago, the dividend has done nothing but go up across these last few years, and looking at this growth, 2021's payments were about 30% higher than the prior year, and last year in 2022, the payments were about 53% higher than they were in 2021. So we'll see what happens with JEPI as time goes on, but for now, I'm happy just collecting those steady monthly dividend payments. Anyway, moving on, my portfolio's 3rd highest payer is Owl Rock Capital Corporation, which is a business development company that provides loans to businesses that may have a difficult time getting a loan from a regular bank. And at this time, they have a $13 billion portfolio that consists of 184 different companies, and 86% of the loans they have out are what are called senior secured loans, which means that if one of their portfolio companies were to declare bankruptcy or default on the loan, ORCC has first right to the company's assets or the collateral to help pay off the outstanding balance on the loan. Now, taking a look at their dividend stats, ORCC also has a nice high yield there in the double digits at 10.25%, and they've only been growing this bad boy for the last year, which really isn't too surprising. BDCs aren't typically known for their extensive dividend growth histories, and really you would want to invest in a company like this to benefit from that high yield and benefit from the high amount of of cash flow that they pay out. And now taking a look at my position, I have almost 108.5 shares of ORCC at an average cost of $13.51. So it's really not an expensive company to buy, which makes it easy to accumulate all these shares. And taking a look at my return with this company, I'm only down 4.5% in terms of share price, but looking at it on a total return basis, I'm actually doing quite well. I'm up 7.5%. Now taking a look at my annual dividend income with this company, it's generating $143.10 every single year, and this amount makes up just over 7% of my portfolio's total dividend income, which is quite a bit, but once again, this is a relatively small position for me. In terms of how it's weighted in my portfolio, ORCC is only 3%, so it's really not a whole lot of money invested in this position. And now guys, this brings us to my second highest paying dividend stock. We're talking about Enterprise Products Partners, which is a master limited partnership, or an MLP, who has continuously paid out distributions since they first came onto the market back in 1998. EPD has grown to become one of the largest midstream energy providers here in the United States, with a network of pipelines that spans over 50,000 miles across the country, and the dividend stats, guys, are looking incredible. Like all the rest of the companies we've seen so far, EPD has a nice high yield at 7.26%, and the 5-year growth rate's really nothing crazy, 2.5%, but they have a really nice track record of maintaining this growth. Even though it is so slight, they've been growing this bad boy for the last 23 straight years, and they are almost a dividend aristocrat. Now, taking a look at my position here, I have 73.5 shares of EPD at an average cost of $22.43. So I'm doing pretty well with this position so far. If we take a look at the return, I'm up just over 20% in terms of share price. And if we throw dividends into the mix on a total return basis, I'm up 36.7%. So doing really well. But anyway, taking a look at the annual dividend income, every single year, EPD is bringing in $144.13. And this represents 7.2% of my portfolio's total dividend income. So it's getting quite up there. But anyway, guys, this brings us to the highest paying dividend stock in my portfolio, and it is none other than Altria Group. And taking a look at my position here, I have 51.17 shares of Altria Group at an average cost of $42.86. And looking at my return here, I'm up nearly 6% in terms of share price, but on a total return basis, it's even better. I'm up about 20% on my Altria position. And taking a look at the annual dividend income, I am getting so close to generating $200 of annual dividend income with this position, currently $192.40, which makes up about 9.6% of my portfolio's total dividend income, which is a huge chunk. And admittedly, it's kind of a bit more than I'm comfortable with, in the same way that I don't want my portfolio too heavily weighted in one particular position by the amount of dollars invested. I don't want too much of my dividend income coming in from any one particular holding. I'd like to have it a bit more spread out. But anyway, guys, with Altria Group, those were the top 5 highest paying dividend stocks in my portfolio. And as we were going through each of those holdings, you probably noticed a pattern. You probably noticed that all of those are higher yielding positions. And with that, you'll oftentimes hear people say not to chase those high dividend yields, which I completely agree with. And based on my holdings here that we looked at, you probably get the impression that that's what I'm doing, is chasing those high yields, but that's not the case. In fact, in terms of how they're weighted in my portfolio, all of these positions are relatively small, and although they make up a combined 37% of my portfolio's dividend income, they're really only about 19% of its total weighting. The reality is the bulk of my portfolio is actually in companies that either offer a higher amount of dividend growth and or are one of those steady, sleep well at night stocks that I don't have to worry about. If we take a quick look at how my portfolio is weighted by dollars invested, my biggest position here is actually Starbucks, who makes up 9% of my total portfolio. Coming in second place is Procter & Gamble at 8.67%, and you gotta love Procter & Gamble with those 66 years of consecutive dividend growth. And then my third biggest position by weighting is Johnson & Johnson, coming in at about 8%, and this is another dividend king, another one of those sleep well at night stocks. Then we've got Lowe's, another dividend king with a 20% 5-year growth rate. And the only exception here is Altria Group, who is my 5th biggest position, and as we saw a moment ago, is my highest payer. And with that, guys, now that you know my highest paying positions and the largest positions in my portfolio, you're going to want to check out this next video right over here, where I'm showing you the rest of my dividend stock portfolio. In this one, I'm going to reveal all of the holdings across my 2 different portfolios, and we'll also take a look at how I've been able to beat the market for the last 2 years in a row. So click right over here to check that out, and I'll see you in the next one.